And right now, as we do each and every Tuesday and Thursday at 3:30, we're going to talk to our man Tim Ord. You can reach Tim at his website, folks, ord-oracle.com. There's Tim right there. And don't forget, right at TFNN.com, hit that services tab. You'll see 2 great webinars, The Secret Science of Market Tops, How to Identify Market Tops, as well as the 6 secret ratios every trader should know. And I always say we talk about some of those ratios here. Tim Ord, good afternoon.
Good afternoon. Market's off here. I don't think it's a big problem. Actually, we're going to we're going to actually go over the S&Ps kind of quickly.
Okay, let's do it.
Then I want to really cover the gold market. Gold market's saying quite a few different things. But anyhow, The top window here is the daily SPX fixed ratio. Next one down is the SPY. And the market is off, 2%. Thereabouts, a little bit more. I went back in time and did a Bollinger Band on the SPX fixed ratio. And this chart only goes back to August. Get my drawing tool here back. Give me 1 second here.
That's all right. Take your time, man. We're looking at those charts. I know, quite a day across the board, equities and metals.
Not sure why. There it goes. Okay. But anyhow, every time the SPY VIX ratio got below the Bollinger Bands, these are the times since last August, and we're actually below it. If you look over here to the right, it's kind of a blown up window. And we're now on the S&Ps, we're hitting actually the lower Bollinger Band now, because when I made this chart, we're a little bit lower. So I'm thinking the market's gone too fast, too quick. The ones to really worry about are the declines that start off slowly, because they usually end badly. The ones that start off like this are kind of the exhaust move to the downside. And for some reason, we don't have a big trend today. The last surge, we had 1.45. And if you get back to the trends, this is page 1. This is usually not, the bottom window is a 3-day trend. Next higher is the 2-day trend, the 5-day trend, and the 10-day trend. And anything around 1.2 and higher are usually bullish. So even the 10 days, 1.17. So I'm thinking this market's just kind of a shakeout. So I'm staying long. The reason why, I think we're just stretched too far too quick. I think this is probably a bottoming process about ready to start. So anyhow, I'm kind of bullish in here still. I'm still long. I don't think this is going to be a lasting decline. Could be wrong. I'll have to correct that when the time comes. On a bigger scale, I'm watching, we covered this last Thursday, I think. I'm watching how this high tests the previous high of December. And if we come in about equal, in other words, within 5-6%, volume-wise of the previous high, I think everything's fine. The market still moves higher. When you get down to 10% lighter volume test than previous high, that's when you're going to have trouble. And so it's kind of early in the month yet. We're, over halfway done. But that's what I'm watching. So if volume really drops out this month, we do pull back, then we could possibly have a bigger decline coming. But I don't think that's the case, just because we already have panic in the 2, 3, 5, and 10-day trends. And panic normally forms at lows. So that's my feeling. I think we're awful close to a low because of they're stretched down into the lower Bollinger Band. So that's how I'm viewing the market, so I'm staying long here. So let's get over the gold market. This is
I just wanted to say, because I was thinking about it, it does make sense that as markets, you say, if you're really going south, that it'll be like my dad, what do you say, the slow bleed, right? You got, I don't know if I remember him saying that slow bleed, because that's really, man, when you wake up, right? You say, okay, well, that was a day, and then anyway, so I was thinking of that as you said. It makes sense. Please go ahead.
Yeah. The ones that really kind of blast at you are the ones that reverse on you. The ones that that is no big deal. Those are the ones could be a death scenario.
They'd be like no buyers any day, right? Down 0.5%, down 0.6, down 0.2, up a little. Yeah, right. That's where you can just be like, month or two in the future, and you say, hey, how do we just go 10%, right? But go ahead, please. Yeah,
that's right. So let's get over this is kind of a market that I think it's actually just starting to break out. I know it's been going up here like gangbusters. But
Hey, you've been on this one for a while, man. Keep going. This is like every time I see it, I'm like, man, that shark. Keep going, please. Yeah.
Yeah, well, it can't go on forever, and that's true.
Sure.
But we have to define what ever is. But anyhow, this is the XAU monthly gold ratio. So when this ratio is rising, gold stocks are outperforming gold. When gold is outperforming the gold stocks, this ratio is going down. And again, we talked about this. It's virtually gone sideways for 10 years now, 11 years, and we're due for a breakout. And I think we may be breaking out right now. And this ratio, if we break out, the really only resistance is basically back at, I don't know, give or take 0.15, which is basically pretty much a double from where we are right now. That means gold stocks will double without gold even moving at all. If gold stays exactly where it is right now, and this ratio goes to 0.15 thereabouts, then that means gold stocks will double. So gold's been running longer, relatively speaking, than the gold stocks. And I think gold stocks are going to start taking over now. And this ratio is starting to break above this previous high here. We're going back. And, okay, so anyhow, I think that ratio is breaking out. This is, the bottom window is a 50-day average of the up-down volume for GDX. So there's another indicator up here, which is advanced decline 50-day average. It doesn't seem to work as well, but chart only goes back to 2010. That's when the chart was created, I guess you might say. And I keep pointing this out. This back in September of last year, so about 4 months ago, this up-down volume 50-day average reached 30. The last two times it got near 30 was 2019 and 2016. When it did that, the market rallied for another 5 months, and 2019 rallied for another year. And we even actually hit higher this time around. And as long as this indicator stays above zero, the uptrend's intact, and that's a blue area here. From here to here, this indicator was above zero. From here to here, this indicator is above zero. Actually, this indicator has actually been on a buy signal since way back here, 2000, beginning of 2025. Yep, I hear the music.
All right, we're going to finish it. And Tim, do you look at the equity, I believe, Goro, Goro? You looked at that one?
Yep.
I had a question in the den over there talking about Goro, because I thought you had mentioned it. We're up 21% today. Folks, we're coming back. I just wanted to give you that one. We got a question. We'll talk to you about it after the break. Folks, we're coming back with Tim Ward. Gold's pushing all-time highs, of course. We're coming right back with Tim. Stay tuned. Welcome back, folks. S&P's right where we are, about 2.2%, but you're right near session lows right now. We got Netflix earnings after the bell as well, but we're talking some gold right now with Tim Moore, and I see the GDX up there. Tim, go for it, please.
Right. Actually, just a quick note on GORO, which is Gold Resources. If you go back to mid-2022 to 2023, or mid-2021, to 2023, there's a trading range there, bounced around basically from 1.5 to 2, and we're bottom of that trading range right now. We're probably going to break through it because that's what bull markets do. My opinion, you're going to find resistance around 2, give or take. But that's that, and that's just a side. Then we may flip sideways for a while. Yeah, let's get.
You got crazy volume on that today too, as well, which is just. Yeah. I mean, I guess you're up 22%. Of course you are, but appreciate you covering that. I know we're getting some questions in the YouTube Tigers Den about it. Awesome.
All right. So anyhow, this is in a nutshell. As long as this indicator holds above zero, and we're at plus 18 right now, 18 and change, this uptrend should continue. So how long that's going to be, I don't know. But once it closes above zero, which is basically in early 2025. This indicator has been long since then. Now it had a big surge up to 30. That was September, and that's the initiation of an uptrend. So how long this thing's going to last to the upside, you give a buy signal, say January 2025, it's still on a buy signal. Market's still going to go higher until this indicator falls below zero. I'm staying long. So let's kind of look at some longer-term indicators. This is the SPX VIX this is XAU to SPX. So this is the gold stocks compared to the equity stocks, the S&P stocks. And what I'm thinking is happening right here, this chart goes back to 1982. My draw tool got... have to figure this out one of these days, but...
That's all right. We got you. I know. Quite a chart, man. Talk about some pullbacks.
Yeah, I'm trying to get the... I don't know why this won't do it. But anyhow, if you look at the blue arrow right here...
yes.
The previous times were at 1.015, and we closed above it, and so that's kind of a breakout. These ratios, just you can use technical analysis with these ratios, and so I'm thinking this is breaking out. So the gold stocks, what that implies is, will outperform the SPX stocks, because when this ratio is rising, that means gold stocks are outperforming the equity stocks, and I think this is a breakout right here. I don't know why this chart's doing that, but anyhow, so how high do we go?
I just want so that the acceleration from like Tim 2011 to like 2014-15 to the downside for the XAU, right? When those equities just got clobbered on that pullback. You know,
right down here.
Do you have any? Because I look at that, right, and then I look at so when I pull up the XAU and from it was running high in 2011 at 220. And by the time you got to the lows of 2015, it was at $38, Tim. From 220 to $38, right? And then you have gold that, it was quite a pullback, but nothing compared to the gold stocks, because gold went from about 1,800. The high there was 1923 in 2011, but you were chopping around like 15 to 17, 1,800, and then you reached a low of like 1,000. So you were only off $700 off 17, which is huge, but it's not to the. Do you think they just mismanaged it? And they did to a degree, of course. But it's pretty remarkable. You had that type of a pullback, and no wonder gold stocks have underperformed. And I look at that and I say, what was going on there, man? Do you have any? I just find myself looking at that, I'm wondering, and boy, because we know how these equities move, and that was just, quite a move. I don't know. Do you think do you look at that at all?
Well, I don't know. These gold stocks, especially, they go in favor and they're rockets, and they go out of favor, they're like lead balloons. And I think we're into a period, and reason, again, I think it's a lot of politics in it. We had over the years, clean air, clean ground, clean water. You weren't allowed to dig up a hole because that would create environment problems and stuff. I think all those regulations are gone now. And so this sector, and along with actually the gas and oil sector, are going to boom here. And that's going to be totally inflationary. But so I don't know. But anyhow,
no, that's what I just asked. Because I can't. It always shows up in your charts, and I think about it again because, man, if they managed things a little, or however it happened, man, that just crushed them. And so it would make sense that they should be higher. They should be higher versus because gold is just so high. And then how is that not possible? There been some, but go ahead, please. Yeah,
I agree with you. It's just I guess the tires are hitting the road right now, and you got to get on the road. So I guess we're going to
and hopefully they don't get over their skis a bit if they did too. That and maybe a little bit of history because whether you're paying to acquire ounces, right, or however that goes, and then there might be there's going to be a pullback eventually, right? And so just making sure that they're able to ride it out and participate when the market turns back up. Yeah.
Yeah, so there's another thing too. The RSI 14 is almost at 80 when I made this chart. Anything above 80, if you go back and look at history, is never the final high. The only reason why, if you have that much momentum to the upside, it's normally you can have a minor consolidation, and the next RSI may not quite reach 70, but when it reaches 80, that means that there's more to this rally to go. And this is the first time it reached 80, going back to 1982. So we're really at a kind of an unusual time on this ratio here. And I think we broke above. I think we're probably going to go up to this line, which is the next resistance line up there. So these gold stocks are, at the moment anyhow, until the technical analysis change, they're kind of the place to be. And matter of fact, I've did a couple of other inflationary type indicators. A lot of them don't look good. This is GSG, and this is all commodities. This is pork bellies. This is oil. It's precious metals. It's all the commodities. And I'm looking at this thing. We actually covered it once before, but this is probably.
I remember, yeah.
Yeah, this is Williams O'Neill, probably cup and handle. There's the cup, and this handle goes sideways. And it only did a 38.2% retracement since 2022, and I think we're starting to break out right now. And we're probably going to go to 40 range, which is basically the top of this range back here. And so that means all commodities are going to break out. That means food's going to get more expensive and whatever. And here's another one I just want to cover real quick. This is the USO, which is basically the oil index, and it's doing the same thing, pretty much the same chart, a little bit different. I did a kind of a cycle analysis. That was the low right here back in mid 2025, and I think we're starting to break out now. And we're seeing signs of strength. There's one right there. Can't quite see it, but I think this is a Head and Shoulders or Williams Neal's. Cup and handle thing. I think it goes probably to this high up here. So a lot of commodity type stuff is all breaking out. So I think this is where the place to be over the next several years. So we'll see.
I like that GSG. I remember you bringing that up for sure. You got all that volume up there at those highs prior too, right? Accelerate higher and all that volume on that chart, and then you're just chopping around. Tim, appreciate the time. As always, man, look forward to talking to you on Thursday. Have a great couple days. We'll talk to you then.
All right. Thanks a lot.
Thanks so much.